What if you could build a whole new financial system right from the ground up using Bitcoin as the bedrock? Well, that is exactly what Michael Saylor laid out in a pretty pivotal speech recently. So today, we're going to deconstruct his incredibly audacious blueprint and the three huge ideas that he believes are set to reshape finance as we know it. Saylor kicks things off with this really powerful quote. And he's not just laying out an investment idea here, he's arguing that the financial world has finally figured out Bitcoin's why, its real fundamental purpose. And, he thinks this clarity has only really snapped into focus in the last year or so. All right, so here's our roadmap. We're going to start with his new financial why. Then we'll unpack his three core pillars: Bitcoin as digital capital, this new digital treasury business model, and the invention of something he calls digital credit. And finally, we'll ask, is this a full-blown revolution? So according to Saylor, over the past 12 to 24 months, this incredible clarity has emerged around three big concepts that really form the foundation of his entire worldview. And these aren't just separate ideas, they're a sequence, one building on the other. And that sequence is everything. First up, you have the formation of a brand new asset class, digital capital. This then makes a completely new business model possible, the digital treasury. And that new model, in turn, allows for the creation of a totally new financial product, digital credit. So let's start with that first piece of the puzzle. So the first big idea is the emergence of Bitcoin as what Saylor calls digital capital. He's making the case that it has finally made the leap from being this niche, almost toxic asset in some circles to a globally recognized form of capital. And that right there is a massive paradigm shift for the whole economic world. So you might be wondering, where's the proof of this shift? Well, just take a look at the insane speed of adoption here. Saylor is projecting that the number of public companies holding Bitcoin is going to jump from 30 in the middle of 2024 to over 200 by 2025. I mean, come on, that's not just growth, that's an absolute explosion in corporate acceptance. For years, the big knock on Bitcoin was that its limitation was that it's just a store of value. But Saylor completely flips this on its head with his favorite line, "The bug is the feature." He argues that being a store of value is precisely what makes something capital. Think about it. Gold is capital. Real estate is capital. The very thing people criticized is, in his view, Bitcoin's greatest strength. And as you can see here, Bitcoin's power is coming from all sides now. We're talking about a political base of 700 million people, daily liquidity of over $100 billion, major buy-in from financial giants like JP Morgan, and literally the most successful ETF launch in the history of Wall Street. Yeah, this is not just some niche asset anymore. Okay, so if we accept that Bitcoin is now digital capital, the next logical question is, what do you actually do with it? And that question leads us right to Saylor's second profound idea, the digital treasury model, which is a corporate strategy that pretty much turns conventional finance completely on its head. I mean, the contrast here is just night and day. The traditional model, believe it or not, treats capital as if it's toxic. The main goal is to get rid of cash by giving it back to shareholders through buybacks and dividends. Saylor's digital treasury model does the exact opposite. It's all about accumulating capital by holding an asset that appreciates faster than the cost of capital, constantly making the company's balance sheet stronger and stronger. So why is the old model so broken in his view? Well, this chart tells the whole story. While the S&P 500 returned a healthy 14%, the traditional assets you'd find in a corporate treasury, like bonds and money markets, have completely failed to keep up. In Saylor's book, this isn't just underperformance, it's the active destruction of shareholder value. And this crucial point is captured in this really powerful analogy. Saylor describes most companies as type 1 diabetics because they can't store economic energy, they're forced to constantly surrender it. Bitcoin, he claims, is the insulin that allows a company to finally store that energy on its balance sheet and avoid, decapitalizing itself into oblivion. And that brings us to the final and maybe most fascinating piece of this whole puzzle. Once you've got a treasury packed with appreciating digital capital, you can actually engineer something brand new from it. Saylor calls this digital credit, and he compares it to distilling crude oil into kerosene. You're transforming a raw, volatile asset into a stable, incredibly powerful fuel. So how does this financial engineering actually work? It's pretty cool. As you can see, you start with the raw asset, Bitcoin, with its super high returns, but also high volatility. Then, through some clever financial structuring, you systematically strip away that volatility. And risk? That stripped out risk and the excess return, it gets channeled over to the equity holders, leaving behind a stable, low-volatility credit product for a completely different type of investor. But wait, here is the absolute kicker, the real game changer. Because of how this is all structured, the dividends from these products are actually considered a return of capital, which basically means they're not immediately taxed. This creates a triple win. The initial investment, the asset's growth, and the dividends are all tax deferred. It's a huge deal. Okay, this all sounds pretty amazing in theory, right? But what specifically makes this so-called digital credit superior to the traditional credit we've been using for a century? Well, Saylor outlines 5 fundamental innovations that he thinks changes everything. So first off, it's backed by an asset that's designed to appreciate, not depreciate. That's a huge one. Second, the risk is completely transparent. We're talking updated every 15 seconds. Third, it's built on equity, not debt. Fourth, it's public and liquid, easy to trade. And finally, as we just talked about, it's inherently tax deferred. Each one of these on its own would be a major innovation. And look, this isn't just some theory on a whiteboard. They're actually turning it into a full suite of products. As you can see here, there's a whole range of options. You've got the stable, low-risk stretch product, all the way to the cash flow maximizing stride, and even a hybrid product called Strike that gives you some equity upside. So there's something for basically every type of investor. Now this is the slide that really makes you sit up and pay attention. Just look at the bottom line here. For an investor in a high-tax city like New York, the difference is just mind-boggling. While traditional investments might get you 4 to 8% after taxes, Saylor's Stretch product offers a tax-equivalent yield of nearly 22%. That's not just a little better, it's on a completely different planet. All right, so when you zoom out and put all these pieces together, the digital capital, the new treasury model, and this super tax-efficient digital credit, you start to see just how big the ambition really is here. This isn't just about creating a new product, it's about targeting the entire global financial system. And this quote really sums up the whole mission. It's not about serving a small group of elite investors. The goal here is to give 1 billion people all around the world access to high-yield, tax-efficient returns, and it doesn't matter what currency they use. And to pull off a mission that ambitious, you need a playground that's big enough. Well, how about this for a number? $300 trillion. That's the estimated size of the global credit market. Now, if digital credit is truly superior, it only needs to capture a tiny slice of this pie to change the world of finance forever. So what's the end game? What are they really trying to build? Well, Saylor calls it the perfect product. Just imagine a financial instrument that delivers 6 to 8% of yield above whatever the local risk-free rate is anywhere in the world, in any currency, all with minimal volatility. If that sounds like the holy grail of finance, that's because it kind of is. And all of this leaves us with one big final question for you to think about. Are these just the fringe ideas of a single, very bold company? Or are we looking at a genuine blueprint for the future of finance? It's a pretty profound thought, and one that you can be sure the entire financial world will be watching very, very closely.